The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. And we have a brand new month to celebrate it in, May 1st, with your humble, lovable, squeezably soft host, me, the koala bear of Wall Street, David White. We meet here 5 days a week, well, at least every day that the market's open. And we talk about things happening that interest me, because you'll have to actually call in to talk about something that interests you. And you can always do that at 877-927-6648. You can email me at path@tfnn.com. Make sure and give me at least a name, first name, and a area so we know where you're calling from. And or you can post in the den. Now, we've had a market out here, a little bit country, a little bit rock and roll. Interesting day today. And let's just see where we're at right now. We're off 1.5 points on the S&P cash, 1882. And it is decent volume. We're just under 2.2 billion shares. So a lot of volume being expended, a lot of energy not going up and not going down. And that's going to be probably a very telling argument for the markets over the next few days. We are pretty much ending fund buying tomorrow. Might have some on Monday. But so far, not a lot of people coming in. Check trim tabs this morning. There doesn't look like there's going to be a great deal of fund inflows. In fact, we might have a net negative out here. But there's always somebody buying, even if they're selling. One fund may get more money than the next. No reason not to keep the markets up here at the high and make the suckers pay top price. As they say on Wall Street, if you're not buying on the top, you're not buying the top, you're just not trying, because that's part of their business, is to get the markets up as high as possible. And if you believe, like I do, Jesse Livermore's book, Not Fooled by Random, Reminiscence of a Stock Operator, if you try to sell why the market's going up or why you're trying to push a stock up in a stock operation or manipulation, you can't get it to go up. Of course, you're adding more juice to it to go down. So you have to wait until you get it to a peak, and then you let everybody think that they're getting a deal on the way down. And that's the market psychology. So it is going to be an interesting day. No buy in May? Well, I don't know yet. We could certainly do this, and markets can always do weird things. I'll always remember the part in Trading in the Zone by Mark Douglas, and who's a big friend of Larry Pesaventos. But I'll always remember the one little part where he has a recollection of a young technical analysis guru coming in and sitting down in front of a gentleman who had been working in futures for about 40 years. And this technical analysis guru said, there's no way that wheat is going below whatever it was, $1.50 or whatever at the time. And he says, the gentleman with the experience behind the desk said, there's absolutely no way wheat can go below $1.50, you say. He picks up the phone, says, sell 100,000 wheat. And it ticks down about a nickel. And he says, that's all it takes for a market to go up or down, is someone decide to sell or buy wheat. And he taught that technical analysis guru probably a little humility, and the fact that all it really does is take one more guy with a big cannon to move the markets at least a little bit. Some people think that the markets are totally random. I don't believe that. Others believe that they follow a strict set of rules and ratios. I don't believe that either. The truth is probably somewhat more in the middle. I think if you wait for the extremes of the highs and lows, your odds are a lot better and more predictable. And I tend to wait for exaggerations in the market, either up or down, with fundamental values. And we'll look at some of those today. But I digress. Of course, we've won just so many awards. I'm building a new wing of the house here right now to actually to house all those trophies for digressing. We're looking at getting into another big trophy room for other awards. But we'll have to. Digressing is, I'm kind of cornered the market on that right now, so I'm pretty happy with that. But we do have a market that's kind of bouncing around down here. Really can't go up, really can't go down. Decent volume for today anyway. But we'll have to continue keeping an eye on some of these stocks. And we'll look at some of the other things going on in the market today. We always like to start off the day with a little bit of history, because if you don't know your history, you're doomed to repeat it. Interestingly enough, on this day in 1975, on May Day, the brokerage commission rates are deregulated by the U.S. Securities and Exchange Commission. And, of course, just a few years later, Charles Schwab comes on the scene. But despite the dire predictions of doom and gloom, May Day ends up being Wall Street's more lucrative year than ever, as rising volume makes up for the lower fees. And they get Joe Sixpack out there all invested in the marketplace, too. And starting of the modern computerized marketplace, about 10 years later, about 1983, 1985, going into the crash of 87 caused by computers. And we've had more flash crashes since then. But this day in 1975. In 1979, software developers Dan Bricklin and Bob Frankston introduced VisiCalc, the first electronic spreadsheet. Suddenly, the PC can save hours of tedious work for its users, and suddenly, investment bankers have a tool that enables them to calculate changing values of leveraged buyouts, corporate mergers, almost instantaneously. Most people don't know how absolutely critical and how close Apple on this date in 1979 was looking at going out of business. I remember meeting Dan Bricklin at a computer store in the Ranch Mart shopping center. It was in the basement at the time, a little place that had been empty for a while. I'd gone in and out of the place because the upstairs was all very nice theaters. But I remember the place very, very neatly. And, of course, I was a big computer head, putting my Altair 8080 together and some of the other computer hobbyist computers you really couldn't do a whole lot with until the Apple came along. I bought my Apple a few months before, and they were having Dan Bricklin come in and give an example of this. Dan, in his infinite wisdom, decided not to patent the spreadsheet, and he was kind of a hippie, so he didn't really care. He made a couple million, 3 or 4 million that year, and about 10 million over the next few years. But what happened was something that no one could have predicted, or no one did anyway. And that was a absolute mass of new MBAs coming out of our colleges, business schools, and they needed a tool so that they could see what happened. And, of course, led to huge productivity in business by being able to just change one number and have them all recalculated. If you've never used a spreadsheet, certainly for certain applications can absolutely save huge amount of time. But there were a ton of Apple IIs sold for this reason alone. And without that software, the Apple II probably, and Apple itself, probably would have wandered off into a footnote of a computerdom. This is not the first time Apple would be saved by software developers building something without any knowledge of the people actually at Apple. These early days get a lot of credit for building computers, or Apple does, by building this computer. And I think that at this point, Steve Jobs gets a lot more credit than he deserves. If you want to know the full story, there's a great book called Accidental Empires by Robert Kringley. And it'll go through everything. But for the most part, this saved their bacon in 1979. In 1985, 86, came along Aldous PageMaker, also a company about ready to go bankrupt again. And Aldous, basically desktop publishing, saved Apple yet a second time after Steve Jobs almost bankrupts the company building the Macintosh. But it's always interesting. And the truth is always a lot deeper than anybody thinks. So we'll have. Anyway, what else do we have? Want to get to some of the stocks that are moving. You can give me a call at 877-927-6648, or you can give me an email. I'll check those at the break. We only have about 2 minutes to go, so why don't we look at a few stocks that are moving out here. Old Avon Products. Remember the ads? I have to get a little doorbell sound out here, but it's Avon calling. I always kind of remember that as a kid. I think my mom went to a couple of these parties. I knew a lot of people that were women that were really big into this and selling I guess it was cosmetics and stuff. But it was that and the Tupperware parties for these multi-level marketing for women. And of course, they all got together, probably bigger than anything. That was all about what they liked in it. But certainly a big moving product today, and getting blown out to the downside with fairly decent volume today. Certainly probably going to see this thing, if we go back any farther. It's blown through the long-term low of November 16th in 2012 at $13.70. And, of course, 6 million shares, going to be tough to say that isn't going to be resistance now for a while. But a lot of these stocks, this thing's just been taking it on the chin. I've tried to short this thing a couple of times. You just can't get shares. This is always like the perennial short stocks, like BlackBerry and Sears Holdings. There are never short shares available. If someone covers, someone else gets that short share almost immediately, betting on the eventual day that these things go bankrupt. And pretty much that is the bet on Avon these days. Anyway, we got a lot of stocks that are moving, some pre-earnings tonight, like Yelp already. And we will are moving other ones like LinkedIn. Yelp's helping it a bit. But we will be coming back in a minute. Send me that email. I will check it during the break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, S&P's off about a half a point. Volume's been very slow here the first 20 minutes of the show. Oh, I forgot to check my email. Better get that fired up here, or I may miss some messages. Don't see anything in the den here, but yeah, we shall get a chance here. Just let my email program catch up here for just a second, and we'll start looking. Oh, I wanted to talk about LinkedIn before we left. Of course, Yelp did fairly good on earnings, and LinkedIn coming out after the bell. To tell you the truth, this is one of the stocks that kind of perplexed me. I thought it was more like a Google. The earnings were fairly easy to identify. The way that they got paid was fairly easy. And so probably a little bit or all the way wrong. I'll let you be the decider out here. I thought this thing would probably hold about 185. Got down to 183, or 143, excuse me, down to this gap. That gap, huge volume. So probably a risk reward pretty horrible here to be snagging this thing down. But certainly a nice gap, huge volume down here from the 8th of February. And that's probably, about 130, probably get about halfway into that gap maybe and fill it. And that would be it for that. Yelp, of course, the instigator of the at least somewhat bounce in this. I've been trying to tear this apart and find out why this thing actually went higher, and I have a feeling it was just a huge short interest, and there weren't blowout negative earnings on the thing. I can't really find anything in here that really says anything other than just a massive bounce. Still have a high volume low out here at 52.40. So this may be one that if you could get this thing back up high enough would be interesting. Question is TZA, and address it. Well, hello, Mr. TZA. Glad to meet you. Is that a good way to address it? Oh, I was talking to this a woman of color, as they like to say these days, in the Walmart, and she said that the plastic bags were bad. She tried to put one of my packages in it. I said, well, I'll cure it right now. You give me those bags. I picked up the bag, and I spanked it 3 times. I said, now, these bags will be good from now on. She thought that was very cute. Anyway, after addressing TZA, this thing's just in a kind of a slight up channel out here. Not a lot of volume down. And, I have a feeling that this is the kind of market that's either going to break out a little bit higher and or you're going to walk in and it's going to be 50 points lower. And at least on the S&P. And I haven't really, there's not been anything out here that really changed my mind on it. I suspect that the next round of downside in the market, when it does come, is going to be a lot more mid-cap and big-cap stocks. And we haven't had that really yet. We've had some individual stocks. But I think this is one of these things where only patience is going to pay off. If you're on the short side, you can make a little bit of money being long, but this is one of these stocks or one of these markets where it's going to be the one day out of 30 where you make all the money. And when flying, I remember there was a saying, everybody out there, that said flying was several hours of total mind-numbing and boring activity and 10 seconds of incredible anxiety and sheer terror. And I have a feeling that's probably a good description of what being short this market's going to be, or being long this market's going to be on the day that it does crack. We just don't have that kind of volume to really drive a lot. And I was watching the IndieX during the day out here, and it was up, It was up about 20 points. There was no volume in the market. It went up about another 10 points. Still, even less volume out here. Not really surprised that it's now up about 12 points for the NQs anyway. And it continues to be rather baffling that we can get into fund buying here, and there's really at least nobody so far taking the bit. Really looks like they're holding this market up for anybody that could buy anything out here. But I think the leadership has gotten incredibly narrow. So I'm thinking that you just need to sit on your hands, and you're going to have that sheer stark terror one of these days, and paid off handsomely for it. In the meantime, you have to keep your risk reward correct. Anyway, looked at LinkedIn, wanted to talk about one of my trades for the Tech Insider. We were short Western Digital, and I think I was short at 94. I think in the newsletter I said anything above 92.50 you could be short on this, and I think it was back in these few days back here, second, third.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, we were talking about one of the trades that we had in the Tech Insider here, and that is Western Digital Corporation. I've got two newsletters. One is a daily newsletter, a lot more active trading, and one that is more of an investment newsletter or longer-term swing trading, and probably even longer if we can hold it. But it is one of the positions that I want to talk about now, and that's Western Digital, and how I put together this particular short and why I think it paid off. Western Digital was actually a test of a previous high. Let's go out here and look at this. I've been waiting for that. See if we can find it here, if I can get the right chart. There it is. Pretty much a test of previous highs at 90 on January 21st, $90.44. Started going through that and really never had that big 3 million share day that it should have as it went over these highs. I've been kind of watching it closely, mostly because I spend a lot of times putting the computers together, and I'm always getting ads from both Newegg and Tiger Direct, and there's a lot of that trade what you know kind of thing. But I've been watching terabyte hard drives go from 110, 115 bucks to about 90 bucks to about 50 bucks in some of the ads yesterday. But we had this thing short. I think it was short at 94.50 or 94 bucks. Anything above in the 92.50, I had the newsletter that you could short going into these highs. Thing actually came back a little bit. You had to kind of watch it, sit through it for a while, but we were patient and it paid off. Huge volume down today. And like most of these stocks, I'm looking for this thing to go back down to that 77 to 75 level where the gap, these two nice gaps are from December 4th and December 6th of last year. Neither one of those have a huge volume level, so you might even get a little bit more from that. But if you listen to the show for a long time, I talked about what happened in Malaysia, and that's when the tsunami came in there and wiped out the 3.5-inch hard drive production model, and these companies really started to take off. I really didn't get my mind around it in time to work off that lows, which I would have loved to. But I sure wasn't going to miss this high when we were up here. Hard drives for a lot of their technology are commodity devices. And if you have a commodity, no matter what it is, and it comes out of that commodity mode, becomes rather hot, and everybody wants it, and there isn't enough supply, it will come out of commodity mode and go into a good either consumer or business mode where margins are fairly high for a while. But eventually, everybody's going to get back into that business. If you're making big, fat profits, that's going to change. And, of course, Western Digital, Seagate, both in Toshiba saw their 6-7% margins go to 20%. Suddenly, these things are going through the roof. Now that margins are falling again, these companies will probably go back to the valuations they had and probably going to see less than 10% margins on these companies. And that's probably a good parable to wait for these companies if you've missed them and figure out when they're going back to that commodity level. There's always, if it doesn't matter how good the technology is, if everybody's building it, it's a commodity. And, they've got a lot of neat hard drives, but you can buy a 3 terabyte hard drive now for what, 120, 130 bucks. The problem is that they're getting better than the ability for people to actually use those. And on the high end, of course, it's contract business for these big cloud services. And, of course, they're not going to pay. They're going to beat everybody up. Go to 3 different vendors, tell everybody, lie to them about the price that Seagate's going to give them to Western Digital, and Western Digital is going to, lie about, or customers going to lie to Western Digital and Seagate. So it ends up being one of these businesses, for the most part, pretty horrible, with short times like the last few years where the tsunami actually wiped out enough production to get the margins up on these products. Now on the opposite side is going to be these guys trying to ship, why the rates are still high, why the margins are still high and come back. So going to be problematic, let's put it that way, at best. But keep an eye on it. But I think we're probably looking at 77, 75, first stopping point out here. So it'll be a fairly decent and sweet trade. I've also put on 3 new positions in the daily newsletter on options. In fact, one you could actually have probably gone ahead and taken the actual ETF itself that we played. But if you are looking up and around here, I don't think it's too late. If you are thinking this market is going down, the VIX is fairly low. A lot of these big Fortune 500 companies, Fortune 100 companies, have puts on them that are incredibly and ridiculously priced low because of the move back up here. So why some people cry that the VIX is low, I think I made a little hay while the sun was shining and added some more positions in those puts. And for the most part, I think they're all kind of paying off. So I'll have to look at them again during the break. Again, you can give me an email at TFNN, at path@tfnn.com. I didn't close my email, did I? Yes, I did. We'll check once again here, see if anybody has anything. Of course, you can always give me a call at 877-927-6648. I didn't see anything. No, nobody's called yet. Kind of a quiet time just in this afternoon here. spot, but we'll check again. Oh, got a couple of emails. Okay. Guess I don't need to lose more belly fat. I'm trying to get a little bit more, really. Looking through my other spam out here. Anyway, we're going to look at a few of these other stocks. JDSU came out with earnings last night. And this is, again, a lot of these companies, it's feast or famine. JDS Uniphase, of course, down again on heavy volume. You needed to basically get below these 1170 levels with less than 7 million shares. Already have 18 million shares out here today, so pretty good indication of blowout lows. And just how far do we have to go back to figure out we blew out that low, which opens up the $9.42 low from October 31st. You got a couple of gaps there, and I think one of them, if I remember right, that's actually not the gap there, is it? Yeah, he came back and tested that gap. I remember that. Probably the high volume day out here. What is that? $11.28. So you're already into that. But my guess is you're probably going to come back and fill even these light volume gaps out, and that takes you back to about $9. So keep an eye out for some of these. And let's take a quick look at the SMHs to see how these things are reacting. Maybe a little closer. Certainly tried to get back up into these highs with the SMHs not too long ago. Got back up into the big candle of April 4th that had 4 million shares. Went into that, made a nice little hammer candle up here on April 24th, 1.8 million shares, so half the volume. Didn't get that high. Would have been nice to have it, but it has kind of rolled over and continue to see a little bit of weaknesses. You do have a higher volume low from April 28th at 43.96, so probably these still look somewhat weak. Looked at LinkedIn. Oh, DirecTV, AT&T is talking about buying them. I don't know how much that's actually real and whether or not the FCC would allow it, or SEC, either one. This certainly looks like them trying to get rid of any competition, either by mergers or acquisitions. DirecTV certainly has the volume today, though. You will want to see this thing close over $80.77 to confirm this is just not a one-day wonder, but AT&T looking at buying them. Not exactly sure how they would say that all this all ends up being some kind of not symmetry. Other stocks of interest, Cardinal Health out here. These healthcare stocks have made what I commonly heard of is called a polytrend top. That is a lot of moving and shucking and jiving up here as it goes around. But the term of polytrend top really kind of means kind of a dome top. And I'm trying to remember the guy that talks about the polytrend top a lot. The only thing I used that the guy ever said, well, I'll think about it. Very nice guy, though. He had a website for a while. Anyway, what he terms this is if you could put a contact lens over the top of it. And, I got a question in the den. Where is the storage that was a good price? I believe it was Tiger Direct and or Newegg. I'll try to find it. I actually sent the links to Steve Rhodes because he was looking at buying some stuff. So I'll try to, Newegg, you don't pay taxes, which I kind of like a little bit better. If you want to go, if you've got a Tiger Direct locally, you can walk in and buy it at the same price, which is kind of nice. We've got a few of them around, but I'll try to find the link to the sales thing that I sent Steve Rhodes yesterday. Maybe it's still available. Anyway, this polytrend top out here, I digressed again. I'm going to win that award one more time. Anyway, think of it as a contact lens over the top of these, and that's what he calls it, a polytrend top. I'm going to have to Google that and find the guy's name again. He had a neat website at one time. In CTRX, Catamaran Corporation. Another one of these stocks out here. you would, basically it looks like this thing's going to come back up and try to fill its gap up here at about $47 CTRX. Of course, making a little gap out here today on earnings. Not as bad as everybody thought they would be, but it'd be back up in there. Angie, we have a Micro Center. Those are probably good too, but I have a feeling that Newegg would probably be your cheapest price, Angie. Okay, and we did JDSU, MKM, Sally Mae, Western Digital, Yelp. Let's see what else we had. We did it. Avon, BVN. I don't like that. We did Cardinal Health. Let's see if we can't find some other stuff to check out. I think there was a few other ones that I did see. And let me see. Yeah, hang on just a second. Rings before the bell. There we go. Come on, baby. Come on. Oh, boy. Okay. And let's see. Percentage change. There we go. Oh, that's the one I wanted to look at. MWW, Monster Worldwide. Another one of these stocks blowing through. And when these stocks get under $10, I've talked about this before, you really need to watch them. I guess that's one I need to bring up before the end of the show is BBRY. But all these stocks, once they get into that $10 level, very, very tough to ever get back above it, because if you're under that $10 level for about 3 months, of course, the funds have to start dumping you, and it becomes a problematic. Monster Worldwide, pretty much been under that for a long time. But you get normally a lot of distribution in these stocks, and it's without having a lot of big, heavy players from Wall Street in this, always fairly ripe for stock manipulation. Another one of the reasons why a lot of funds don't like to have stocks less than $10 in their portfolios, but most of them in their prospectus say that they won't own a stock below $10. But certainly Monster Worldwide down on huge volume, and that opens up this nice gap at around $4.50. So I think we're going to get an opportunity on some of these stocks to buy them a lot cheaper. No, not the parent company. I had a question. When you profile, let me read the profile for Monster. Provides online and mobile employment solutions. You might have remembered this company, Monster Worldwide, is a company that ran the herding cats ad during the Super Bowl and some of the other stuff. But they are basically headhunters and trying to put people together to find jobs in technology. But wicked down candle on that today. We'll be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
As we come back, we'll look at a couple of stocks that actually were higher today. And BBY is one. And this is Build-A-Bear Workshop. I think anybody with a kid is familiar with this company. If I'm right, Build-A-Bear Workshop operates a special retailer of plush animals and related products. The company operates in 3 segments: retail, international franchising, and commercial. But, not a huge volume stock out here. In fact, most of the time, the volume is pretty lean. Got about 500,000 shares today, though. And, maybe they had a nice Valentine's Day or something. I probably won't be playing a stock with that light of volume, but always interesting to watch. To RJet, another one I don't spend a lot of time looking at. Let's check this one out today. Nice little pop out of here. This thing's coming back down. Republic Airways Holdings, RJet. Nice volume pop back up into the trading zone out here, but I'd still say too much volume down here at this $7.82 low, and my guess is that thing's going to get checked out sooner or later, probably later. BZH, 4%. Let's take a look at this thing. Yeah, this back to its gap like a lot of these stocks. Once it gets back to the gap, it's nice to pop up. This one certainly had a nice pop with 2.7 million shares on November 7th. Came back down here, and this thing really looks like a little bit of accumulation out here with all these little kind of doji days out here for about 7 days. So a nice pop today. You should expect bigger volume, and you didn't get it. And so I'm going to give this thing 2 more days. I'll check back in on it probably Monday or Tuesday on the show. We'll take a look and see what's going on with these. But a lot of these, you're getting bounces. You're just not getting the energy that you would like to see back into these things when they come back. And how much time do I have left here? A couple of minutes. Okay. MPC. Another one I haven't looked at in a long time. Marathon Petroleum. And maybe Andy can tell us more about this. I'm not sure. Lots of volume out here. Maybe they are one of those companies that he talks about that more of a refiner. Marathon Petroleum. Let's take a quick look and see, because this would be very interesting, especially with the crude coming off like that, this thing popping up. Refining, transportation, and marketing petroleum products. So they're probably one of those stocks that Andy talks about with the crack spread. So this one actually up. It needs some more volume, though, but it is above the previous highs out here of 91.95 on December 31st, March 17th, 94.88 with 5.4 million shares. So you really need that 5.4 million shares as it gets through it. I imagine you're going to get that today. Certainly not a sign of strength. What you wouldn't like to see is a close back below 94.88 out here. But Marathon Petroleum, maybe Andy will comment about the fundamentals driving that one. What else do we have out here I wanted to look at before the end of the day? You got MasterCard slightly up. And this thing kind of in a down channel out here, rolled off this high, had enough volume. It should have broken that April 17th high. It did not. You had 5.5 million shares on that April 17th high, and we're going through it, closing back below it, which if that holds, not a good sign. You have a high volume low that is untested out here at 68.68. And the question is whether or not you're going to get into that. Anyway, hang on for Andy Heck, our guy. He's going to talk a little bit about it, but he says, yeah, crack spread's lower today. Divergence. We will be back tomorrow, same bat channel, same bat time. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.